Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. Traditional financial institutions like the big banks and other lenders like business development companies, or BDCs for short, are seeing their share prices gain traction. And you might ask, why is that? This is because back in November 2023, Federal Reserve said it was done raising interest rates and rate cuts were on the table. Since then, inflation has come down and the Fed has begun lowering interest rates. Solid economic data also suggests that US will avoid a recession and achieve a much desired soft landing. A strong economy and interest rate cutting cycle should result in banks and other lenders issuing more debt and announcing new deals. This is especially true for BDCs, or what we at Income Investors like to call alternative banks. John?
Yeah, thanks, Mo. BDCs are actually the backbone to America's so-called small businesses. They provide capital to small and mid-sized companies. Wall Street's big banks are too busy ignoring those type of companies, even though they might generate between $20 million and $100 million in annual sales. They're still way too small for the big banks to pay attention to, at least in the early days. Big banks will step up to the plate once they start making more money. Some well-known customers of BDCs over the years have been everyone from Rug Doctor to Smashburger, Impossible Foods, and Payless to even Facebook. Because these companies have few places where they can go to borrow money, BDCs can also charge above average interest rates. For instance, a commercial bank might earn as little as 3 to 5% on its portfolio. By comparison, BDCs collect yields as high as 10%, 12%, or even 15%.
Unlike traditional banks, thanks to quirk in tax law, BDCs pay out some of the highest dividends around. Traditional financial outfits have to pay the government between anywhere from 25 cents and 35 cents in taxes on each dollar they make in profit. But for BDCs, they pay little or no corporate tax on their earnings. In exchange for this benefit, BDCs must legally distribute at least 90% of their ordinary taxable income to their shareholders. And it's not uncommon to see alternative bank stocks pay out as high as 15% dividend, 5 times higher than what you would earn from traditional bank stock. So, John, today's income pick is Main Street Capital. They are traded on New York Stock Exchange under symbol MAIN. What can you tell us about Main Street Capital?
Main Street Capital is, as you probably would guess, a BDC that targets lower middle market companies with annual revenue between $10 million and $50 million. And EBITDA of between $3 million and $20 million. The equity it loans out comes with pretty favorable terms to Main Street. Most of the loans have fixed variable rates, which means they rise as interest rates do. And because their equity has senior status, they get paid before anyone else does. The combination of working with profitable companies with senior status loans has resulted in an exceptionally low default rate. Now, in addition to making money from loans, Main Street also takes an equitable or equity position in each company they lend to. With over $7.6 billion in capital under management, their portfolio currently stands at 194 companies with an average loan size of $20.2 million. Now, briefly, some of the industries Main Street Capital invests in include internet, software and services, healthcare, tobacco, and aerospace and defense.
If you look at the financial performance in management word, it said another strong quarter. What's happening here?
Well, for the second quarter ended June 30th, 2024, Main Street Capital announced the total investment income increased 4% year over year to $132.2 million. Now, net investment income inched up 2% to $87.3 million or 1 cent per share, while distributable net investment income was also up 2%. At $92.2 million or $1.07 per share. During the quarter, the company completed $154.4 million in lower middle market portfolio investments, including roughly $88 million in 3 new portfolio companies. It also completed $323.8 million in private loan portfolio investments.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And John, I know income investors will love this. Main Street Capital has never lowered its monthly dividend.
Yeah, Main Street Capital's unique investment strategy and even conservative capitalization allows to provide long-term growth in recurring monthly dividends and supplemental quarterly dividends. Since October 2007 initial public offering, or IPO, Main Street has periodically increased the amount of its regular monthly dividend paid per share, but has also never reduced its regular monthly dividend. In the second quarter, the company's distributable net investment income exceeded the monthly dividends paid to shareholders by 49%, and the total dividends paid to shareholders by 5%. Now, the company declared a regular monthly cash dividend of 24.5 cents per share for each of October, November, December of this year. This works out to 73.5 cents per share on a quarterly basis, or $4.09 per share on an annual basis, for a pretty frothy yield of 8%.
Main Street also announced its 12th straight supplemental quarterly dividend.
Yeah, again, thanks to a strong second quarter results and favorable outlook for the third quarter, management declared a 30-cent per share supplemental dividend. This represents the 12th consecutive quarterly supplemental dividend. And to reiterate, it's also increased its regular monthly dividend 8 times since the fourth quarter of 2021. Now, including all the dividends declared to date, Main Street has paid out $42.62.5 per share in cumulative cash dividends since October 2007, when it IPO'd at $15 per share.
MAIN stock is at record levels.
Well, typically, I wouldn't look at a stock with an annual dividend of just 8%. We prefer companies with dividend yields above 10%. That said, I'm willing to make an exception when the underlying share price is crushing the broader market. The main stock actually hit a new record intraday high of $51.60 on October 16th. Now, currently trading hands as of the recording at around $51.70 per share. Main stock is up 40% year over year and 28% year to date. Now, that's the total return and includes reinvested dividends. Now, had you elected to cash in those monthly dividends and supplemental quarterly payouts and, take the money and run, the annual return slips to 27%, while 2024 gains fall to 19.5%. I wouldn't be surprised to see Main stock hit fresh highs over the coming weeks or months. They report preliminary estimates for the third quarter, which were pretty solid. This included net investment income of 99 cents to $1.01 per share, and distributable net investment income of $1.05 to $1.07 per share.
John, thank you so much for your analysis. Main Street Capital continues to be a great BDC with strong balance sheet and growing portfolio. On that, one that helps it generate a lot of money and provide investors with stable monthly dividend. For income investors, Main Street Capital has never decreased its monthly dividend. It has declared 12 consecutive supplemental quarterly dividend, and its stock is at record levels. And good times are expected to continue. Based on continued strength in third quarter, management expects to report another meaningful supplemental dividend to be paid in the fourth quarter of 2024. This would represent Main Street Capital's 13th consecutive quarterly supplemental dividend, to go along with 8 increases to its regular monthly dividends since the fourth quarter of 2021. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.